new trading day, but first let's kick off with our top story. President Duterte has signed the Financial Institutions Strategic Transfer or FIST Act that's allowing financial institutions to sell bad loans to asset management companies. This new law provides for a mechanism that will allow banks or lending firms to monetize non-performing loans. Data from the central bank showed that the banking industry's non-performing loan ratio reached 3.6% as of the end of December. NPLs increased by nearly 75% to 392 billion pesos by the end of 2020. Bangko Sentral Governor Ben Diokno welcomed the signing of the law, saying it will help keep the banking system stable amid this pandemic. Now, in a series of tweets, Diokno said the law is expected to reduce the NPL ratio by about 0.63 to 7 percentage points. President Duterte had earlier certified this measure as urgent. U.S. Treasury yields surged to the highest in over a year, whereas stocks over in the U.S. pulled back from record highs. You can see that on my terminal here, the Nasdaq down by 0.3%, the S&P 500 as well closing in the red. This comes, of course, after the United States was closed for a holiday over it on Monday. Now, you've also got China, which still remains closed until Thursday. So they're reopening tomorrow finally. Of course, they've been closed for the Lunar New Year. That was 1 week of a holiday there. But you can see a bit of a mixed picture. The Nikkei 225 sliding just like Wall Street, down by 0.7% over in Australia as well. We did see a weak start over in South Korea. You can see both indices there opening on the back foot as well as in Singapore. So a broad-based regional pullback there. But you've got on the other hand other commodities, let's say, are rising there. I did want to take a quick peek at oil. So that has actually surged above, at least this is for crude oil in New York, that has surged above $60 a barrel. That, of course, also comes as there's a deepening energy crisis over in the United States, which is crippling that petroleum industry. But you've also got Bitcoin. So Bitcoin broke through $50,000 for the first time before falling back down. And you've also got copper. A lot of eyes on that specific commodity. Copper climbed to the highest since 2012. Tin, on the other hand, extended a dramatic surge. You've got Citigroup forecasting that copper prices will rally to around $10,000 a ton within 6 to 12 months. They're expecting a better than expected recovery, most notably outside of China when it comes to demand. Now, another thing that might be propelling equities, at least in the short term, are the vaccine updates. So you've got vaccination drives delivering some better results. In the UK, for instance, there was a study reporting that people above 80 years old were most likely to test positive for the antibodies of COVID. And you also have an Israeli study showing a 94% drop in symptomatic cases among the vaccinated. Now, let's take a quick peek at how we are opening and whether we are going in step with the rest of the region. It does seem to be the case, unfortunately, sliding back by close to 1% after we had seen a quite nice rally yesterday. Now, what was that rally all about? You can see that on my terminal here. This, according to Phil Stocks, this rally came amid acting NEDA Chief Carl Kendrick Chua recommending to ease the restrictions. I recall that he was hoping that the entire country could be placed under MGCQ or a less restrictive quarantine measures. But this, according to Chris Mangon of AAA Equities, the general sentiment is still cautious. Investors are awaiting all of these policy and mobility changes. Now, let's take a quick peek at the banks. This is the main index or sector to be watching out for today, as the President Duterte has now signed that FIST bill. Interestingly, banks are opening also in the red this morning. Perhaps investors still need to digest all of this information, but that's down by 0.7% this morning. You've only got Philippine National Bank, which is actually on the upside. That's up by 0.6%. But look at Metro Bank suffering a decline there by more than 2%. A couple of stocks that I wanted to shed light on today. DoubleDragon. Recall that they had filed with the SEC their intention to do a REIT listing, and that has now been approved by the Securities and Exchanges Commission. Recall that this is a 14.7 billion peso REIT sale plan, and that offer period will be from today until February 25. That's going to be at 2 pesos and 25 centavos each for that REIT. You can see DoubleDragon, the parent company, going against the red tide. That's up by 2.6% this morning. And finally, just one more stock that I need to take a look at, MPIC, of course. This, on the other hand, has seen a cash infusion due to the fact that they've sold their stake in the Thai tollway, in a Thai tollway operator. That's $149.3 million worth. This is just above 7 billion pesos, and they received cash for that. This is, of course, FPM Tollway and MPTC signing an agreement for the sale of AIF toll roads. This company owns 25% of Don Muang Tollway, which, of course, operates a major toll road in Bangkok. Investors seeming to cheer that sale. That's up by 0.7% for the parent company. MPIC trading at 4 pesos and 20 centavos this morning. Now, here to chat with us about all of these developments and more, we have with us Chinabank Securities as Rastine Mercado. Good morning, Rastine, and welcome back.
Good morning, Danie. Great to be here.
Rastine, let's take a step back and tell me what your general sentiment is. I mean, this morning you opened in the red, but actually yesterday we had quite some positive sentiment. And when you look at the global, rally, it's still nevertheless in positive territory. A lot of optimism on that vaccine front, and even that delivering some good results. Do you feel that slowly you're feeling this optimism having some legs?
Well, I mean, coming into the year, right? A lot of investors, a lot of uh, uh, traders were expecting a recovery in earnings in 2021. So I think a lot of that is contingent on whether or not there will be a full-scale inoculation in populations across the globe, right? So for the Philippines, I think part of why we're continuing to be strong is that we now have a plan. We're looking to roll out our own program in the coming few weeks, at least a soft rollout, and then moving into a mass vaccination program towards the end of the year. So again, these are all positive developments. Hopefully, this helps us propel our economy to a better state than where it was last year. So again, it's a matter of whether or not we deliver on expectations, right? So hopefully we do get to deliver that, given that we apparently have the legs to kind of muster that. In terms of valuations, there has been some concerns late last year, coming into early this year, that we may be trading at expensive multiples. At this point, we're trading at around 19.1 times, which is still a little bit higher than the 18.1 times average over the past 5 years. But if you really think about it, there is some expectation of earnings continuing to grow through the year and into the next year, right? So if we revert to pre-pandemic levels, that might propel our markets higher towards the higher valuation multiples that we saw late last year. So that may be around 20, 23 times. So it may be a matter of earnings catching up to valuation expectations. So again, all of these point to higher markets. So hopefully we do sustain that momentum.
Okay, now speaking of earnings, we've just got a couple of blue chips that have released their earnings. We also had Jollibee, we had SM Prime yesterday. Does this give any indication to you of how you mentioned an earnings recovery might be underway?
Well, for JFC, we did see an improvement in 4Q figures. This is in line with the push from its international businesses. So that's a good thing, right? So whether or not this will be sustained or can be further underpinned by the domestic operations, we'll likely see that in the first few quarters of the year. So that's going in the right direction. In terms of SM Prime's earnings, again, we do see the mall segment kind of dragging profitability last year. So hopefully, we do get that foot traffic back in this year, maybe towards the end of the year when consumers are more comfortable going back to malls, boosting foot traffic. So again, those will all be contingent on how fast we could inoculate the population.
Okay, so some positive surprises actually there for you, at least when it comes to Jollibee. Let's talk very quickly about the FIST bill. I know you're from Chinabank, you can't really comment on that, but just quickly, Rastine, I mean, it's quite surprising, at least to me, why the financial sector is in the red this morning, despite this news. What's going on?
Well, again, I think there's broad consensus that this would be a positive catalyst for the sector. Maybe it's just a matter of selling on news. With issues having rallied over the past few weeks, banking stocks going higher. So it might be a matter of those who are buying on this potential catalyst now cashing in, so taking profit. So it might be a function of that. But then again, towards the medium to long term, the focus is now going to be on how banks will utilize the mechanism on their fist, right? So if you think about it, it frees up more capital for lending, but this higher capacity for lending should be met with firmer demand for loans, right? So we're only really going to see that once your consumer and business confidence picks up. But then again, we go back to how that is highly predicated on how confidence builds, and pretty much that's based on how the vaccination drive is going to be.
Okay, now speaking of all of these developments, you have a new one in terms of the property space, and that is the DoubleDragon REIT. Now finally coming on the table here, possible listing in a few days. Really, tell us, is this now the time, especially given that the central bank has now kept rates steady or on hold, on pause at least? Is this the time to be rotating back into REITs or more stable yields, even as there is a global rally underway in equities?
Well, if you look at the bigger picture, we have a market flush with liquidity, right? And with other fixed income instruments yielding pretty much near their lows, it's probably the reason why we see REITs being one of the darlings in the market. So, for context, our REIT has been rallying over the past few weeks. So, given that interest from the market, I think that provides a good backdrop for DDMP when it does list, right? So there's so much interest, and then again, this is also an offering that a lot of investors have been waiting for. So again, there might be some concerns in DDMP with regard to its tenant profile because it's mostly POGO or POGO related. So there might be some concerns there, but then substantial lease expiries are seen in the next 3 to 5 years. But then ahead of that, we do see them already have renegotiating those contracts, and probably if ever there will be some tenants who will vacate the office space that they have. This might be offset by uptick from other traditional firms, right? So in terms of PES accreditation, that's also underway for DDMP's property. So we might also see some BPOs take up office space, especially since we have create possibly getting passed over the short term, right? So that removes a significant headwind for foreign locators. So again, this is a space that's pretty stable in terms of yields,
Okay.
and it's significantly higher than where their sphere rate is at, and other fixed income yields. So I guess a lot of interest will be on DDMP right now.
Very interesting. But last point on that, Rastine, how would this affect A REIT's performance and DoubleDragon? Will there be a rotation from these stocks into the new REIT?
Well, we might see some rotation, especially those that more of your traders who are betting on or at least betting on the momentum that DDMP will carry with it once it does this, right? So it's a move before DDMP, so that's why ARIT has been moving up. But then again, if you look at it, the profile of these assets or these equity classes are distinct, right? So
Okay.
it could also be it could also just be a lot of other firms or a lot of other funds looking to invest in these new asset classes, right? Since this is seen to ramp up through the year, then there's more visibility in the sector. So that might be the one fueling demand.
Okay, so and as you mentioned, market still flush with liquidity there and investors
Mhm.
thirsting for some new assets to invest. And thank you so much for those insights. That was, of course, Chinabank Securities' Rastine Mercado.
Thanks for having me, Danny.
Checking Zooming in on the other headlines we're keeping our eyes on, the Budget Department has ordered agencies to prioritize the full devolution of certain local infrastructure projects next year. This is in a bid to ensure continuous funding for big-ticket items. Now, recall that the Supreme Court in the Mandanas case gave local governments a bigger share in national taxes effective 2022. The Budget Department has submitted to the Office of the President a draft executive order that outlines 295 billion pesos worth of local projects that can be devolved next year. But Budget Undersecretary Laura Pascua said ensuring budget allocation for priority infrastructure projects would still be in the hands of lawmakers. Senate Finance Committee Chairman Sonny Angara said big-ticket infrastructure projects that are, quote, shovel-ready would be the ones prioritized for funding in 2022. The Agriculture Department is proposing a drastic expansion in the volume of imported pork to address the rising food prices and quell a potential inflation crisis. Secretary William Dar told the House Agriculture Committee that the import proposal covers the volume of pork shipped in under the Minimum Access Volume Scheme. The agency wants to expand the volume of the country's pork imports to about 404,000 metric tons. That's from the current MAV of 54,000 metric tons. Dar adds that the Tariff Commission is also preparing a report proposing to reduce pork tariffs as part of a strategy to stabilize prices. Senators are seeking assurances that the government's moratorium on new coal-fired plants will not raise costs or disrupt supply. Senate Energy Committee Chairman Sherwin Gatchalian said the transition to a coal ban needs to be part of a workable strategy shifting to clean energy. He noted that at present, the DOE moratorium does not appear to be in the context of a larger energy transition plan. For starters, he wants the agency to outline until when the coal moratorium will be and how other technologies can fill in the gap left by coal. The Energy Department in October declared a moratorium on new coal power plant projects to effect a shift to a, quote, more flexible and sustainable power supply mix. And that's a first look into the business day. Today is Wednesday, February 17, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel and we are One News.